Good afternoon. Your market news now. Shares in the Asia-Pacific region were mostly higher in trade as investors continue to assess the impact of the Omicron COVID variant. Hong Kong's Hang Seng Index gaining 0.3% as of its final hour of trading, pairing earlier gains of more than 1%. Mainland Chinese stocks closed mixed, with the Shanghai Composite slipping slightly. In Japan, the Nikkei closing 0.1% higher. When we look at what's happening on the European market side of things, markets on that particular front, little changed again as investors continue to monitor the threat that has been posed by the Omicron COVID-19 variant. Yesterday, we did have AstraZeneca becoming the latest company to announce that it had begun work alongside Oxford University on a Omicron-specific vaccine. Moderna has announced that a third dose of its mRNA vaccine appears to be providing significant protection against the variant. Meanwhile, U.S. stock futures were muted after the major averages rebounded from a 3-day losing streak. So we've had a whole host of news come out, especially over the past 24 hours. Yesterday we had Massmart. So I'm going to put up on screen for you the Massmart chart just to show you what exactly has been happening with this particular share. That one that is currently on your screen is the Massmart year-to-date chart, currently trading at around 57 Rand 50. We did have Massmart, of course. They are the owner of Macro and Builders. They have reorganized their debt obligations because they have seen an increased face-off losses after the riots in July. And it has announced that it's looking to sell 15 of its 114 game stores. The company expects its annual losses to year-end to worsen by 20% from the previous year, during which it recorded a loss of 1.8 billion Rand. So that's the year-to-date chart. But just to give you a sense of how this particular share price has actually performed, I've given you a 10-year chart that I've put on screen for you to see. The highest of that particular chart, if you could just go back to that Massmart 10-year chart, just to give you a sense of what was going on here. So 2013, the highest, that share trading at 204 Rand and 15 cents. And we just see that pattern seeming to dip there, especially as we got to 2018, reaching a high again of about 180 Rand, and it just seems to go lower and lower from there. The situation did deteriorate at around 2019, which is exactly at that point where it starts to become a little bit lower. This was because of what was happening from a debt level point of view. They were seeing that situation deteriorate as we get into that July unrest, where they were dealing with weaker consumer spending. There was also a slowdown in the formal construction industry, and of course government infrastructure spending, which was hurting the builders range and the side of things. And one of the things that has been I would argue, even contributing to the worsening performances has been the fact that the company, we will see this in their financials next year, is that they have to start reporting the impact of that July unrest in the financial results for this particular year. We did see the company disclose that as part of EURUSD, but they will have to start reporting it. But because they're still dealing with a whole lot of these riots and the payout from that particular point of view, they lost 2 of their macro warehouses at this particular stage at a cost of 2.5 billion Rand, and about 650 million Rand of that will not be covered by insurance. So again, when we look at the financial for next year, we might see a slightly different picture when it relates to Massmart, because this is when the payouts will actually be reflected in the financial statements. But I want to take it back here just a little bit when we go back to that restructuring of that debt deal. We did know that a little bit a while back, Massmart did organize a 4 billion Rand rolling loan from their parent company, Massmart. So at this particular stage, they've converted half of that loan, and it will be a perpetual fixed rate unsecured note that will be treated as part of equity in terms of IFRS. So the question then becomes, from a market's point of view, is whether this gives them a further potential to increase the ownership of Massmart. Walmart has, of course, reiterated that they will continue to support this particular company. They did pay 148 Rand per share for this particular share over a decade ago. Under Sleip, that is the chief executive of the company, Mitchell Sleip, we have seen some changes when it comes to what Massmart has done internally. They've closed down 2 Dion wired stores. This was the loss-making electronics chain. They merged 4 of the businesses in order to consolidate costs and improve efficiency. And also the layout and its IT systems and a whole lot of product assortment at Game also had to change. It's quite interesting to see what's going to happen on this particular front. Markets, of course, are still waiting to see if they will be able to deal with that sale that is awaiting the Competition Authority for approval. So that gives you the Massmart share price in terms of what has been happening year to date and also that performance on a 10-year chart. But I want to come back to those oil prices. We had that chart just briefly, so we're going to put that on screen for you to have a look at what's happening. So oil prices rose again as the dollar slipped, with risk appetite returning as some governments resist imposing lockdowns to curb the spread of the Omicron COVID-19 variant. And again, as China says that it will be able to sustain economic growth, oil prices typically move inversely to the dollar, with a weaker greenback making commodities cheaper for those holding other currencies. But before I get into what's happening with those particular currencies, so this is what the Brent crude 2-year chart looks like. We're currently just below $80 a barrel, but a little bit in November we reached $86, and that's come down, or rather come up quite interestingly, because if you look at what was happening, say last year May, our lowest was around $19.26 a barrel, and a whole host of questions coming into this particular variant that we're dealing with, the Omicron variant, where a lot of the concerns that has come to the fore, a lot of questions that market analysts have been asking is, what does an Omicron environment do to the oil demand? It's also the same question that OPEC Plus has been trying to answer as well, warning about that, saying that, well, they're not sure what the demand picture will look like going into 2022, and just seeing where the price of the Brent crude price is sitting at $73.82. But there's a whole host of other issues that come into play here, which is one of the concerns we've been raising, especially as we get into that taper environment. So let's look into that currencies picture, because I did mention that there is a correlation between the price of Brent crude and what's happening with the dollar. So we're going to get that euro-dollar chart on screen for you. And again, there's a clear divergence here between the outlook of the Fed Reserve and the European Central Bank, especially when it comes to interest policy in 2022. Economists at Bank expect that the US dollar upside has further to run in the early months of 2022, consequently saying that they have revised down their 6-month euro-dollar forecast from around 112 rather to 110, and doubts over whether a bullish dollar momentum can last the whole of next year. So when we look at everything and we bring in the currencies into this particular conversation, and we bring in that, the price of Brent, as we've spoken about, the picture looks a little bit differently from how we kicked off the markets a little bit earlier on Monday. That dip buying action seems to be the theme of the week. But the concern around that dip buying action is, how long can it last? Is it going to be short? Is it going to be shallow? The question also that is coming to the fore for market analysts is, what is pushing it? Is it the concern around the fact that there has been a little bit of some equity performance happening on that particular side of things? Is it a consequence of what is happening on the bond side, where yields at this particular point not showing a lot of downside anymore? We're not getting paid to be in the bond market, so perhaps investors are moving their money into equities and probably seeing what kind of return they can get from that particular side. There's nowhere really else to be, which is what one of the analysts has pointed out in an earlier conversation that I had, saying that right now it's about picking spots adequately when it comes to the equity side of things. Even though we are in that Fed taper environment, we had the Fed Chair Jerome Powell saying that we might have to come back to the table and look at how we can actually reduce that bond purchases and look at an interest rate cycle going into next year. We are still seeing a lot of market action happening from the equity side of things. Another question we need to ask as we wrap up the year is what happens to risk assets in an environment of policy tightening, policy normalization? What does the yield look like? The 10-year yield, you may have seen on your screens a little bit earlier on. Right now, it's about 148. And those predictions about a 10-year yield of around 2% coming into 2021 don't seem to be reaching consensus, especially when we look at some of the predictions that we saw from an index's point of view, when we look at what's happening from a U.S. side of things. All of those doesn't seem to be playing out, especially from the equity side of things. So that is what the picture looks like. Those are the questions that market analysts are asking themselves as we get into 2022. And a little bit later on during the week, on Friday, on Christmas Eve, we will be playing an interview that we have for you, as we have a lot of our analysts coming through. They do a lot of stock taking in terms of the year that was. Yesterday, we had the finance ghost giving us his investment strategy about how he came into 2021 and what sort of shifts and changes he's had to implement from a portfolio perspective. So later this week, we're going to be speaking to Warwick Lucas from Galileo Securities about what's also happened, the key themes that have played out for this particular year. Inflation was one, China was one, supply side issues was one, and whether he thinks any of those themes will be going into January 2022. There is a general consensus that the fears around the Omicron variant and what it could potentially mean for the global economy, what it could mean for supply side issues and going back into that normalization will certainly be a theme we take into 2022. So all of that will be keeping you abreast of that. News that we are looking out for later today is U.S. GDP figures for the third quarter, as well as U.S. confidence numbers.